Good morning, everyone. What's up? What's up? Hope everyone is well. So there are just a few people here stuck in the waiting room. I don't know why they're not getting in. It's just that's what I was waiting for before I start, and also just waiting. I had a bit of difficulties. I got here a bit late, so that's why I was starting the meeting late. So with that said, I hope everyone is well. Welcome back to our Wednesday analysis. So we'll recap what we talked about on Monday. This week I don't have any trade running just yet, so I really worked on filtering out the types of trades I'm taking. So I'm only taking grade A trades from now. So we normally grade our trades from grade A, B, C. So that's what I'm working on now, just to get those high probable analysis which can help in the long term get better hit rate and profitability. So apart from that, before we go further, I hope you watched yesterday's launch for Apple. So they launched, I know we don't trade Apple stocks or anything, it doesn't concern most of you people, but for the Apple fans, we got they released 4 phones yesterday. So just a recap for people who do not know. So there's the iPhone 12 mini, the iPhone 12, the iPhone 12 Pro, and the iPhone 12 Pro Max. So if you're trading well, you make some money, it's good you can cop a nice iPhone in the future and trade with it. So anyway, with that said, I'll just jump straight into the markets. Let's not talk much about that. If you have any questions, ask me in the meeting room. Ken is not in today, so I'll cover the rest of the pairs. I'll cover some of the pairs. He looks at gold. I'll cover that, and Dow Jones as well, including my USD card and Aussie dollar. So we can jump straight into that. So I'll share the screen. So let's start with dollar index, okay? So we just want to know how dollar index is performing relative to the other dollar pairs. So we want to know the relative strength of the dollar so that we can anticipate whether we'll be seeing dollar strength coming or dollar weakness. So personally, you remember we've been having this trend line. It's not been broken, so I'm sure most of you have this channel formation. Nothing yet has been broken. Market has been respecting it, going to the downside. But yesterday we got a very strong bullish close after the Monday holiday that we had. So if you remember on Monday when we were doing our analysis, Monday was really, we actually said it will be a slow day, which it was. There's no much movement because it was a bank holiday in America. They were celebrating Columbus Day. I'm not sure what it's all about, but it was a public holiday. So yesterday we saw momentum come into the market from early morning. Momentum came in from early morning, and we saw dollar index rising up on the daily chart to close with a very strong bullish close. Okay, if you go down to the 4-hour chart, clear to see that we had sort of a wedge pattern over here that was broken yesterday. So the whole of Monday we had this consolidation over here. It was a strong consolidation. Market just ranged. Then at 4 p.m. Around when London opened, around 4 p.m. we saw this momentum come into the market very strongly during the New York Open. So we've broken out of this trend line. If you go also to the 1-hour chart, we have a channel sort of which is being broken. So there's this clear pattern analysis. So if you're getting my point how I'm analyzing, it's basically a top-down approach where I basically break down the market from a top-down perspective down to the down perspective, the hourly charts. So what I'm normally looking for, I need the markets to be in sync in order for me to get a trade. So why I'm saying that is because if you go to the daily chart, or I mean to the weekly chart, why don't have any trades running just yet? We've been having this very strong bearish closes, but we had also this strong bullish momentum. So this strong bullish momentum, we broke out of a very strong ranging level. If you zoom out, you can also get to see that this is a third bounce in line with 78.6. So market is supposed to get that strong momentum to the upside. However, we got the last 2 weeks, we got that strong correction on the daily chart. So weekly chart is showing me more of bullish, daily chart is showing me more of bearish, 4-hour chart is showing me market is breaking to the upside. So if you break this trend line, then that daily chart analysis will start being broken and will start respecting the weekly chart. But as long as we remain below this trend line, we'll be looking for the market either to continue pushing down or until we get that break of that level. So that's all I have on dollar index. So my dollar pairs, that's why I have a lot of conflicting biases, and whenever you have conflicting biases, if you take a trade on that, you won't settle on it properly, because you'll start, if the market goes against you, you'll start saying the other analysis bias you had is going on. Okay, it's right, I should take that trade. So I normally try and avoid that. So if you go to gold daily chart, if you remember on Monday, We clearly covered this bounce. So first bounce, second bounce, third bounce, market came back to this level. You've seen this market has been consolidating at this level. So last week we had this strong breakout to the upside where market broke on Friday above this support level. I mean, support turned resistance, now turned support, and now it's turned back to resistance. And if you use pivot points, I don't use it that much, but we're analyzing this with my partner Taras yesterday. This level is around the P level, so there's a lot of noise at this point. Market is breaking up, breaking down, and that's if you go down on the 4-hour chart, which will get down to that level. But you can see on the daily, I normally look at market structure, and that's what I'm paying attention to. So you can see market has been respecting this trend line. So unless we break this trend line, I'll be looking for those shorts, and coming back up, unless we break above this level over here, this resistance level, as well as this counter trend line to the upside, is when we start looking for those bullish momentums. So when you're trading the market, you don't have to really focus on having to know where the market is going to go. The main thing you're just looking is, this is what I'm anticipating. If A happens, then B is meant to happen, and C is meant to happen. If that happens, then you get your trade and you ride it. If you go down to the 4-hour chart, same gold pattern. I shared this on the Telegram group today morning. What we're seeing is that we're within this sort of market structure, very clean, very clear, very precise. We're seeing this downward trend line that we're seeing over here. First touch, second touch, third touch. Market has been forming lower lows, lower high, lower low, lower high. We formed another lower low a few weeks ago, and last week we formed the lower high. Market has been dropping. So what we're paying attention to, you can see this market structure I have over here. Okay, this one that we're having is sort of formed that higher high, higher low, higher high, but I cannot still predict that we're going to form another higher high unless this trend line is broken. So in the long run, it's better to respect what has been happening, which is this pattern that has been forming. But don't forget the daily chart, the bigger perspective. That is what many people forget, and they come down and start trading the hourly charts, and they forget what is happening on the big picture. So we can see earlier on today morning, if I go down to the 1-hour chart, if you had this counter trend line, or sort of this trend line over here, it had the first touch, second touch, we got a third touch yesterday. You can see over here I've written early buyers with tight stop loss was spiked out. So that's a normal thing that happens. If you bought yesterday after seeing this consolidation, or after seeing this bullish candlestick over here, and you quickly jumped into it saying you're putting your stops below this previous spike level, all of those trades were taken out today morning. This was around 4 a.m. so I'm sure most of you were still asleep during the Asian session. Market spiked that level, rejecting 1882. Market has come back up, so we're paying attention to that. The 4-hour chart showed a nice pin bar formation, so with that you can expect to see market maybe continuing to rise before we get that continuation to the downside. So also this one, I'm sitting 50-50. A lot of things are still not in line for me to trade it, so I'm sitting out of it. Last but not least, I look at Aussie dollar. Aussie dollar almost forming the same thing like gold. So if I go to Aussie dollar daily chart, simply what you're seeing, we had this channel formation. Okay, so this channel formation, we have this counter trend line. Market broke out, and we got this retest last week on Friday. Very strong bullish Marubozu close over here on Friday, but earlier on this week, market has been coming to the downside, respecting this retest as well as this trend line bounce of the counter trend line. If I go down to the 4-hour chart, the next thing you're seeing is basically this is what we got. Counter trend, this trend line, first touch, second touch, third touch. 78.6 wasn't hit to the T, but it was around that level. 61.8 was a bit lower. Market broke above to get that trend line bounce. Market has come back down. So just like gold, overall we've been forming this lower lows, lower high, lower low. This was a very strong lower low. So impulse, then we got this correction. We might continue to get an impulse to the downside if this counter trend line is broken. So that's what we're expecting. But if not, we'll be seeing market pushing further up. So pay attention to this level. Market will either respect it today or break it today, especially during the New York session, where New York session is where we're looking for the market to break out of such levels, such counter trend lines or trend lines. That momentum normally comes at that time, and it offers us the path of least resistance. So that's what we're waiting for. So we have to make sure you have this counter trend line. I'm sure many people are watching it, and that's exactly what has been happening over here. That's what has been respected. Okay, so clear, precise. That's what we're watching. If I move down to now I've covered USD card. No, I've not covered USD card, have I? No, we've not. If I go to USD card daily chart, remember what we covered on Monday. So trend line coming down, 61.8 was respected. This market is very, very bearish. Looking at it, I'm not seeing a good opportunity if you want to be long on it. A correction can come in, yes, but I'm looking at this pair continue dropping lower to the 1.280 level in the very long term. If I go down to the 4-hour chart, already knowing the daily chart is showing us a perspective to the downside. The 4-hour chart, I have this channel formation that we've been covering for a while, so you can plot it on yours. This is just a widescreen view, so you can see market is within this channel formation. But if I zoom closer to what is happening, as I said on Monday, what you're expecting to see on this pair is maybe a correction sideways movement, at least to touch this trend line and continue to the downside. We are very, very bearish on this one, so I'm not looking for buys, I'm more looking for shorts, but I'm also patiently waiting to get that short confirmation. So I'm not forcing the market just to jump straight into it. I'll wait for that correction to come, especially the fact that this was a quick correction over here. The next we can get over here is maybe a sideways movement before we push further down. So that's what I'm paying attention to. USD card, nothing much to say about it. If I go to the 1-hour chart, nothing much really. We can see 1-hour chart, market is just consolidating down here, so I don't have anything much on that. So I'll look at Dow Jones as well. For people who cover the Dow Jones, this market has really been pushing up. If I go to the weekly chart, there's a potential that we can form new highs before elections or even after elections. You never know what is happening. I've never traded indexes during elections time. I started trading this index this year, so much of this pair I'm really sitting out and watching, learning from it, learning how the market performs on this. So we've been seeing market ever since we got this bottom during the corona crisis. Market has been forming higher highs, higher lows, higher highs on the weekly chart. We can see this level held, market is continuing to the upside. So if this level is broken this week, this level, let me highlight it for you. So if this level is broken this week, these highs, previous highs where market spiked, if we're able to break that, then we'll be seeing new highs coming to form on the Dow Jones, because the previous high is not as far. And I'm sure if you normally watch S&P and the Nasdaq has actually been in it's still in all-time highs. It's continuing to push further up, and the S&P. So that's what we can see happening on the Dow Jones. If I go down to the daily chart, daily. So daily chart, channel formation, clean pattern. What we're forming is 27,500 market held, and market is continuing to push to the upside. So we can see new highs being formed, targeting especially $30,000. I mean the 29,500 as the first target before we see any serious movement on this one. 4-hour chart, yesterday we didn't see much movement. 4-hour charts, you can see basically we had this wedge. I covered this a few weeks back. Wedge to the downside, market has been forming up. Normally when you get a wedge, we're targeting this ultimate high level at this level. That's why I'm saying 29,100 level is a very good target for this pair. So we can see market has been coming. Yesterday we didn't get much momentum as we normally do during the New York session, especially that they came out of their holiday. We didn't get much momentum, but what we can get later on happening, this market can push a bit down, maybe get this trend line bounce and continue to the upside if the upward momentum is maintained. So that's what I'll be watching on Dow Jones. I trade this market heavily, so last week, as I said, it gave me a lot of losses because I was trying to short this market and it continued going up. So ever since that, I've not had any major trade, so I had to really refine a lot of things, learn from my mistakes and move on. So that's all I have on Dow Jones for those people who trade it. Those are the main pairs I trade. If maybe I can look, Ken normally covers Euro JPY. I don't analyze this pair, but we can see the pair has really been dropping. So but I don't have much. Maybe something else you can look at, let me not force myself into that, is dollar euro USD, because it's really correlated with dollar index. So we can see we sort of had this trend line. Market tried to respect this trend line. It was broken to the upside very strongly, and later on this week we've seen the market falling further down. So we are back below. We've broken below this channel formation, as well as back into this trend line. So we are down here, and market can seem, especially if we break below this. So you're looking at these liquidity levels, especially if we break below this level. And when I say liquidity levels, we're looking for those levels market was forming higher highs and higher lows. So this was the previous high higher low. If the previous higher low is able to be broken, the market will be changing from higher highs, higher low formation down to lower lows, lower high formation, and the market can continue going down. So pay attention to that when you're trading this pair. So I think that's all I'll cover today, because I have something more important to share with you guys. Since you're all here, I see there's no question really in the chat room. So one other thing that we're working on is, most of you, the main problem most of you are facing, especially in trading, is lack of capital. So we are sort of trying to solve that problem, especially to you retail traders, people who are looking to get some money and be funded. So we are sort of working on that program, and later on in the week, or maybe even next week, we'll tell you now how it's going to work. We'll be showing, we'll release a few videos here and there to explain how it works. If you want to get funded, what requirements you need to meet so that we can fund you and you can get a good substantial amount of money, so that you can trade with it, with you only putting in a minimal amount. So we'll talk about that. We'll tell you, I don't want to speak much about it, but we'll talk about it later on. So that's all I have for today. I see there are no questions in the chat room, and as usual, as we normally say, if you want to come and meet us, you can always come to our offices in town at JQuat Towers. I see Gloria is talking about gold. If I can repeat gold. Okay, cool. I'll repeat gold. Before I even repeat it, I said when I normally have conflicting biases about the market, I normally don't take any trade, because psychologically I'm protecting myself, because I won't perform well when such things are happening. So if I go to gold, as I said, gold on the daily chart showing very bullish momentum plays coming. So as you can see, we had higher highs. I mean, first touch, second touch, third touch, trend line, basic, very basic analogy on that one. But what we're paying attention to is that we're having a lot of noise at this level. So I do not want to participate in this noise, because you can see market is not really pushing up or getting that movement to the downside. We have this counter trend line that I'm looking at. So we got that first touch, second touch, third touch, and the fourth touch, which we'll look at on the 4-hour chart, and market has dropped back down. But on the longer time frame, we're seeing market has been forming higher highs, bouncing off the trend line a third time. So what I want to pay attention to, if I go down to the 4-hour chart, 4-hour chart, this is the clean, neat, precise chart analysis you're seeing. So I don't have any pivot points. I basically use market structure, Fibonacci, and a lot of Elliott wave analysis. So you can see market has been going lower lows, lower high, lower low, lower high, lower low. Then we came and formed another lower high. Market bounced off this level on Monday, and yesterday we saw that momentum coming to fall down. So if you want to trade this pair, what I can tell you to pay attention to, especially if this counter trend line is broken, okay? So if this counter trend line is broken, the market will be showing the path of least resistance, which is to the downside, where you can be targeting 1850 as your first target, 1875 I mean as your first target, and then 1850 as your second target. If it continues further down, maybe even 1825. But for now, you can see this level, Fibonacci 78.6, as well as this counter trend line, is what is holding the market. So you can wait, be really patient, wait for that break first before you commit into this pair. But that's what I'm looking for. If I go down to the 1-hour chart, 1-hour chart, as I said, early buyers, people who bought this pair yesterday with a very tight stop loss, because people normally do that a lot with gold, and that's why you really get whipsawed. People like to put very, very tight stop loss, because this market can move very fast. So people who did that, you can see you got whipped out today morning. People are very whipsawed, and market has moved back up. So watch this area over here. A lot of injection into the market is happening at this level. Very soon, I think during the New York session, because the New York session is where you get to see market moving with momentum, and such levels are normally broken. So that's when it can happen. So pay attention to that. So that's all I have on gold. So just watch this pattern, and like I said, if this level is broken to the downside, 1875 and 1850 are good targets. But if market continues to the upside, wait on the 4-hour chart. Do not just jump quick into it. We want to wait for this level to be broken. If you want to take that trade and run it, then that's being more risky, which is fine. Some people like that risk and they can ride it having a good entry. But for me, I'll wait for this break. Normally when you get such breaks, it's easy to see a breakout and a retest where I'll be looking for that entry, or a breakout consolidation. Then we start preparing for those entries to either side. So I'm not forcing the market to move anywhere. and that's what I'm watching. So no trade running on that. I'm just sitting out and watching what the market is going to form. As I said, I'm really looking for A++ trades, so that's what we're paying attention to for now. Why do you like trading gold? I mean, this pair moves fast. Yeah, that's why, to answer your answer, Rotich, I have two very volatile pairs and two very not they're not volatile pairs. So I have USD CAD and Aussie dollar. Those pairs don't move fast. If they move fast and you're in the good side, that's a lucky day for you. But gold and dollar, Dow Jones, are pairs that are very, very volatile. They can move so fast. So many people I know that are trading have blown their accounts using the gold. Many people think gold can give them a lot of money, which it can, but they forget to factor in that gold can also take a lot of their money. And most of the people I know have blown their accounts using gold as well as oil, because oil also moves fast. So according to my strategy, I filtered that out. I decided I'll deal with one commodity, so I did away with oil. So I deal with gold, I deal with one index, which is Dow Jones. I moved really fast, and on the other side I deal with Aussie dollar and USD CAD. So I sort of balance the two. So on a weekly basis, what I'm normally looking for is I can look for one volatile pair and one non-volatile pair, and only trade those two and stick with those two. The moment I start trading all of them at once, my mind, I know, will not be able to contain all that information, and I can really get confused and trade badly. So that's why I trade those. You just need to find balance, and once you find balance, you start trading that. I cannot really suggest that you trade only non-volatile pairs that are not really volatile and don't move fast, because you won't be able to maximize when you're right. You'll be making little losses, little returns, little losses. So you need to know how to balance that. It all comes down to trade management, which we teach here at our courses, especially on the 1 month course that we have for the masterclass, which is straight about talking about strategies. So yeah, I don't see any more questions. I think I'll end it I'll end it there for today. I'll see you guys on Friday. Hope you guys will turn up. And yeah, so be patient, like I am being patient, waiting for the nice analysis to, because you can get that one trade in a week and make the amount of money someone who has traded 5 pairs has made. Because if you have a win rate of 50%, that guy has lost half of the trades. But if you wait for that good analysis to come through, you can always come out better. Less is more, less is more. We always say that here trading. So yeah guys, I'll see you guys on Friday during our next session, and we'll catch up. This video I'll also upload it on YouTube, so you can also catch it there if you didn't get it from the start. So I'll see you guys soon. Have a nice one.